Hey guys, welcome back. In this video, we are talking about AMC becoming explosive, the heavy accumulation, the AMC merger, and many more in this video. First, we take a look at this. Why AMC could become explosive. If AMC starts pushing above 180, then especially above $2, then the out of the money calls can start becoming meaningful hedging risk. So one of the things we've always taken a look at has been the options on AMC. And the reason why we talk about this is because it often tells us what's going to happen for AMC. It allows us to understand the sort of volatility we would be expecting and the pressure we can apply towards the short sellers. Right now, as you can see, there is still heavy option activities with AMC. There is still plenty of out the money options being bought. And the important thing about this is obviously understanding with why they are then trying to push the price of AMC down. We see the gamma exposure expanding, we see it increasing, and we often know that AMC, especially with what's doing right now, the real price discovery, the natural price movement is of course going upwards. Everyone has their different price targets in mind, but something that we are all sure of is with the current fundamentals, with the current market, that AMC should be going up. And so with understanding that, we know that these options are going to become more and more explosive, and as we see the pressure we're applying towards these short sellers become more and more intense, you will understand how that will happen into a snowball effect of triggering AMC going upwards. More importantly, what's important about it is that it's not just the retail who are buying these options, but we're also seeing institutions who are going quite heavy in these options as well. And one of the things we should know is that once the AMC MOS begins, I expect numerous slight attempts to make people sell. Indeed, the 300% mid-May 24 run-up followed by a steep drop may very well have been a preparation to influence AMC apes to expect a climax followed by a steep drop. So one of the things, and we've seen this recently as well, is what they try and do to AMC. What we saw was, of course, AMC going from 0.93 all the way upward to that high of 194 before then seeing that decline going back down to this 1.24. Now, the thing about this is that we knew what happened over here. We knew that AMC at 0.93 was extremely discounted. And so plenty of people, whether it was retail, the apes, or the institutions, they all wanted to buy AMC. What came afterwards was the aftermath of when you put too much pressure for the short sellers. We saw how much options were coming in the money. We saw the 150 come into money. We were seeing closely to be above $2, so the $2 call options to come in the money. And because of that, you start to see the synthetics go up. You start to see the FTDs goes up. You start to see the dark pool go up. And we were seeing the price tanking down. And that wasn't done because people were selling. That was done because the market makers were afraid of what's happening and they try and bring it down. So remember, this is what happened even after AMC only goes up 100%. Imagine what would happen when AMC is going up 1,000% and higher. And this is why we need to be expecting what they try and do. You can see dark pool routing on AMC just signaled abnormal institutional accumulation. Large-scale executive block trades are triggering settlement alerts. So this is what we've said. More and more people are seeing the opportunity. You're on the media right now with all of these articles, they're telling you to stay away from AMC. They're telling you to sell AMC. What they're failing to say is that the inflow of capital going to AMC right now is greater than ever. And more importantly, the institutional inflow of capital into AMC is greater than ever. And so whilst they're telling you to sell, all of the big institutions are trying to buy as much AMC as possible. So clearly something's obviously going on there. And this is how we know that they're trying to do this in secrecy. You can see also here to 72% off exchange. And this is how we know that when it comes to AMC with the manipulation, with the suppression. And the reason why this is important was that this happened on Friday where we saw AMC again push all the way down. You can see it closed out 151, but the max pain was 150. So they tried desperately to close AMC below 150. And this is why we see this massive exchange. Yes, they failed, and we know that they were going to start failing because we are already seeing how the intensity is starting to happen, the illiquidity issues they're having. And so this is what we're witnessing. And you're also seeing AMC sitting near 23% is significant. What's especially notable is that shorts added 16.7 million shares between 15th of April to the 30th of April, and it added into/after the rally. And you can see this with the official short interest. Now, bear in mind, whilst it's official, at the end of the day, these short positions are self-reported. And we have seen in the past before, especially with the indicators we've seen recently, how this is nowhere near the positions that we will be looking at. Because whilst they say the short interest is 22.99%, we've seen from data and how we've dug into it is that actually synthetic short interest is all the way above 300%. And so this is what we can see right now. The thing to take away from here is the fact that they're adding on to the short positions. It's not 16 million, it's not 22.99%. It's obviously way higher than this, but what we do know is that they are still adding in synthetics. And that tells you everything you need to know about what's happening with AMC, what's happening with the institutions. Furthermore, and you can see here multiple people, when AMC is going to be breaking 170 to $2, you should expect momentum and likely lead to large price swings, because we've seen how AMC is already building up. We see how institutions are accumulating. More institutions have accumulated during this level than this level. And when they see the time is fitting, when there is more interest that's aligned, you can expect how AMC is going to go higher than before. And so this is what we should be expecting. This is what we are understanding with the data right now. And you can see why that's going to create even more fear for the short sellers. And in return, they're going to try and create fear for the retail to try and hope that retailers will sell their shares. And you can see here with understanding AMC's numbers, with understanding their optimization, you can still see the media articles telling you to sell AMC. And this is what we've said with how they are saying all of these bad things about AMC. They are trying to paint AMC as a bad stock, but yet they fail to say that institutions who are increasing their accumulation like never seen before. But why would they do that if a stock is bad stock? So this is what we said with how mainstream articles is only trying to diffuse you in terms of what you're seeing, and they're trying to lead you down a different path. And when we expect for the AMC Q2, you're going to be looking at how well the Q2 will be. You're looking, and that's going to set up for how well the Q3 will be. And I think one of the biggest things right now is that the moment we see Q2, and if we see the cash flow, if we see the profits, if we see the operational costs all getting improved, you're going to suddenly see a massive boost of investment capital. Now, the retail will buy, obviously, that's because we know what we're seeing. But the institutions who will finally notice about what's going on with AMC, they will start to try and power in. If you think the institutional accumulation is big now, then you should expect even bigger things for where AMC reports these numbers. And one of the things we're talking about is, of course, how with all of these benefit aligning, we're seeing Penwater, we're seeing Discovery, who are all buying into AMC, who are holding shares of AMC, who are willing to exchange debt for AMC shares. It goes on to talk about the position that AMC has put themselves in and kind of the future that we have. And so everything is starting to align. Right now, box office momentum is building. CEO Adam Aron has bought 250,000 shares. 2026 movie projections are getting stronger, but it doesn't obviously stop there. As we talk about AMC saying that they have secured the rights to the 2026 FIFA World Cup, with intense interest in football among potential Latino theater visitors. So we've already talked about how this is going to bring in massive numbers as well. And another big thing for this is what it opens up in the future. I think this is still a small step for what Adam Aron is doing, because this is something that whilst in America may not gain huge interest, but what Adam Aron has wanted to do is, of course, go into college sports as well. And something that I know of is that, of course, college, and if you want to talk about American college football, and we talk about college basketball as well, all of these things, if are able to be streamed in theaters, will do massive numbers, because that's what one of the biggest interest in America is. So I think it's already a very good thing that they have this partnership, but I think it will be a bigger thing is that if it opens the door to more opportunities. And we're seeing how well the box office is doing. Like we said, everything is aligning for AMC. You can expect the earnings of AMC to do well. Another big thing is what's going on with IMAX right now, as they're trying to explore a sale. Now, this is quite significant, because with what IMAX is doing right now, people are pointing out the logical acquirers to be Cinemark or AMC. So this is obviously very, very big news because of what it means for AMC. First, we have to understand that IMAX right now, with what they're trading at, with the market cap, with the kind of all of the premium, it is going to be something that is costly for AMC, but it is something that when absorbed by AMC, it would be extremely healthy, because if you take a look at right now, in terms of the current revenue sharing with IMAX that we already have, it would make vertical on a high percentage of IMAX screens. So this would mean that AMC gets to keep even more profit, and it would give AMC a cut of competitors' revenue. So this is going to have massive leverage for AMC, obviously, if AMC were to purchase it. But there will be difficulties that comes into it. Like we've said, where it comes at a premium, it's going to be quite costly. It would mean that AMC would have to find alternatives, as opposed to, of course, cash outright buy it. And that would mean perhaps maybe using shares. That would mean perhaps trying to raise money through different means. And so, it is not something that's as simple as let's buy it for AMC, but it is something that if happened to go through, it would be beneficial for AMC. But it is something that we should keep a close eye on, because if AMC is able to get their hands on this, I definitely think it's going to be extremely, extremely powerful, especially with right now, what's going on right now with how, we talked about the partnerships with AMC, with Netflix, and a potential competitor, maybe Netflix as well. But I think a massive thing would be if AMC decides to buy IMAX and Netflix decides to join in as well, it would be something that would be extremely, extremely intense. And I think it's something that could potentially have a very high possibility as well. And you can already see how AMC is trying to obviously improve on their screens. And this is exactly with what we talked about, with how they're trying to expand their reach, expand their focus on this, and why buying IMAX will just be something that speeds up the whole projection of what they want to do. Another big thing right now is how people in Wall Street are now switching their narrative and stating that the stock is undervalued. So it comes to no surprise that all of a sudden, as we see liquidity stress for the short sellers, as we see all of the margin calls happening, all of the margin requirements being raised, suddenly they're all saying AMC and GME is undervalued. And with what we're seeing right now is that they want to buy GME as well. Just like with what we saw with AMC, we saw the same thing with GME. Plenty of money flowing into the stock, but because it's rooted into the dark pool, it doesn't have any effect in the price. So what that means is that institutions want to buy GME without affecting the price of going up, because then it'll be cheaper for them to buy even more. But it really goes on to say that the demand for GME is there, the demand for AMC is there. And if AMC and GME are these so-called dead stocks, why would they want to buy as much as possible? And another big thing is Ryan Cohen, who has reiterated that he takes $0 salary and his financial interests are 100% tied to the common stock. And is why I believe that, again, the decision that he's making is in the best interest of GME, and will, of course, want GME to squeeze as well. And we can see in terms of how the short sellers, they need liquidity. They're looking at how short sellers are struggling right now. They're seeing the margin calls. And another big thing is SEC delays plan allowing for crypto versions of US stocks. And so what we once talked about as kind of something that they need to put more focus on, they finally started to do so. Now, this is something that shouldn't even be allowed in the first place, considering what tokenization of stocks have done in the past. But I think it's a good thing that SEC have delayed this whole thing, because what we talked about with this is that how it allows the abilities for the market makers to create more synthetics. And that's something that we don't want. When you take a look at where the reverse repo ended on Friday, 0.965, once again, a lack of money going on here. And something that is also alarming the bells is the US private credit, which recorded its highest default rate on record. So it really goes on to say that right now, the current market is not in a good state. And at any point, we could really see it turn upside down. As always, this is Financial Advice, and I'll catch you guys next time.